generally speaking, then, do you believe that this ongoing financial crisis that we've seen for the past few years, is that going to continue, or you the view that we've solved the problems? And I can see from that you're going to say we haven't solved the problems.
Well, I wouldn't be putting on the Sound Money conference if I thought it was all fine,
Sure,
James.
but you know, we're talking about money on one hand and credit on the other. The two are different, right? Or at least sound money is different from credit.
I suppose it is, but credit is obviously the core of the debt cycle. And what we're talking about is you know, you're talking about financial planning and wealth management if you're talking to me about it. Yeah. And what I would say is that, well, I mean, as far as I'm concerned, you want to be looking at asset or rather investments outside of the debt cycle rather than investments within the debt cycle. And necessarily, because that's the case, I think that the collapse of the debt cycle or the termination of it is absolutely still ongoing, and I unfortunately think we're probably, I don't know, 3 innings into a baseball game, I suppose. Yeah,
I tend to agree with you. I think we have a few more years to go. So in terms of the equity side, it would be in terms of tangible assets or companies that produce tangible assets, commodity producers, things of that sort, and stay away from the financial.
Absolutely, and for those clients who have the risk profile which will allow it, I also like investing the fixed interest component of a client's portfolio outside of sterling. Now clearly not everyone is appropriate for that, but certainly to my mind over the medium term, if you invest in asset-backed currencies, I'll give you a couple of examples being Canadian dollar and Norwegian Krone in particular, I'm very keen on. I think it's an interesting way over a 2 to 5 year time frame to make better returns than gilts or even in treasuries, but with lower risk and considerable potential for appreciation in currency terms. So yes, it's not just equities that are backed by tangible assets, but actually even irredeemable currencies that are backed by tangibles.
Well, both of those currencies, the kroner and the Canadian dollar, being countries that have a heavy resource base. The problem, though, is that how many people can really find safety in the Norwegian kroner?
That's exactly why I like
it. To
it.
the moon.
But that's another reason why I like it, because as a firm, we you know, Chivia is a sort of £3.5 billion assets under management operation. And I actually wrote a piece about this exact point, which is it's quite funny to me how, in fact, 80-odd% of private client money that's run in the UK, certainly, is run by the big institutions. And exactly the point you make is they are unable to buy what I would call quality sovereign debt, like the Norwegian debt, because it's not big enough. In other words, it's not approaching insolvency. It appears to me that the large institutions can only buy debt which, as it approaches insolvency, it's impossible.
There's a lot of Greek debt out there, but not too much Norwegian debt, right?
That's right, and you know, Norway has a $500-odd billion sovereign wealth fund, a 14% current account surplus, only 4 million people. There are many reasons why, purely on a safety basis, you know, it looks like a good place to park cash. But obviously, all these things are dependent on timing. You have to look at, you know, timing. You don't want to go in when things are going crazy.
Would you call the Norwegian kroner a sound currency?
I think I would probably refer to our friend Mr. Kaiser at this point and say what I've said before, which is I think it's the best looking horse in the glue factory. Considerably better than the dollar, which sometimes he refers to as the best looking horse in the glue factory. I understand why he says that, but I would say the Norwegian kroner is.
Well, they all have their moments, I guess. At certain times, you know, one looks stronger than the other. At other times, the other looks stronger.
Well, I think that's right. But wait a minute, we're talking about current account surplus and a huge cash pile and a tiny population. You won't find any other currency like that. The only other one that even approaches it is Singapore dollar. But there are also other reasons why that is a different setup to Norwegian krone, mainly the fact that it's a very broad-based export economy within the Asian centre, so they can't take a big appreciation in their currency to the same degree the Norwegians can, because the Norwegians, you know, they sell oil in dollars. It makes up a vast proportion of how much the country makes over the year. So I feel a bit more comfortable with that sort of managing its way stronger over a, you know.
The only one that comes to mind would be the UAE dirham, if you have the dirhams deposited in Abu Dhabi banks and not Dubai banks.
Okay, well, I take your word for it, James. I can't say I've researched that, so I wouldn't want to pass comment.
Yeah, I don't think they have much in way of sovereign debt, but you know, in terms of small population with resource base, you know, that would probably work as well.